Good morning, everyone. Welcome to the metal markets. I updated my OBS and it has some new stuff happening. So I have to make sure that I'm clicking the right button. Can you guys hear me? Let's do a little technical check. Let's make sure I click the right button because I was not prepared for the interface change. Alright, so Bruno's saying all good. Right, we can start the analysis. Welcome. The function of this show is to have a look at some relevant levels in the metals and in the energies markets alike. If you're new here, I'm Market Stalker D, aka Deeyana Angelo. I have been trading commodities for 20 years almost. And that means I focus on things like precious metals, base metals, out of which we can only trade one on Topstep. But also crude oil, natural gas, RBOB, heating oil, and the like. So we're going to start with metals first. I have a 1 hour time frame on copper. Copper has been my baby. It is really quite a good product because it allows me to think pretty nicely whilst I'm in a position. Frequently offers pretty nice swings as well. And right now we're sitting at the gamma flip level of 575, just above it. We do have the TPO London value sitting at 75.65. If that starts to reject, there could be a long here. And also, let's have a look at the weekly time frame. Weekly time frame is telling us that there is a range, and the range is pretty wide, but we're kind of at the bottom quarter of that range. That means that if the range is going to stay, we might see some longs stepping back in and bringing it back to the mean somewhere near this point of control on this visible range volume profile, sitting around 590. 590 in the options is also a very relevant level. It has remained so for a number of days, but then we also have a bigger level at 6 evens. That's more of a weekly target if we do start to see some longs. Now to the downside, to play devil's advocate, there are some levels as well. So let's go back to a 60-minute time frame first. Because we have a pretty visible demand area that we would need to tackle if we're going to see some more shorts. But at the moment, we have a pretty decent 1 hour demand sitting at 573.80. So maybe a little dip down to that and then a reversal. That would be pretty good. So a little overshoot of the gamma flip and then a quick reversal would be something to think about. Of course, we could always just stay above 575, but we do have the volatility in about, let's say, an hour and a half, when copper begins to show some bounciness and wiggliness. So we want to make sure we don't get caught in that, right? Right, to the downside, if it goes into a value acceptance for the London session, so I'm just gonna roughly sketch out where the London value is located. So it's roughly around here, and I'm going to change that to a purple because I like my values to be in purple. So yeah, if it starts to go lower, it's actually a little bit higher like this, we could see it go all the way to the opposite side of value and reach a weaker put wall currently located at 570. That would also comprise the test of a bigger demand area that you can see to the left. And that's also a possibility. Another option for shorts, because I don't like to have the the shorts this late in the swing down, because if you look at the structure of the swing, we're pretty far down into it. But since the whole price is now sitting underneath the Tokyo range, there is a good chance that we retest somewhere around 580, 580.50, and then seeing more shorts stepping in. That will be an area where I would like to maybe engage with the sellers and then running it back to wherever the market stops for this session. So a couple of options there. Now, if we start to break out completely, I'm not going to be interested in that, and I will probably be sitting it out and looking for my opportunities elsewhere. I'm dropping down to a 30-minute time frame. I am going to plot the London initial balance as well. And we're going to do that with the horizontal ray. So here is the initial balance high. And then this one at 575.80. Here's the initial balance low. Why does that matter? It's because the first hour of the range can offer you an insight of how the auction is doing. Now, I will also do another thing here where I'm going to plot the fixed volume range. At the moment, it's teasing the edge of the developing value low. Again, if it accepts that and goes higher, it would constitute what we refer to as the failed auction. That means a push to the opposite side of the entire initial balance on the first failure of the auction is something you can expect as a higher probability trade. It doesn't always happen. Sometimes they do partial failed auctions and then continue to chop in range, especially if we have strong sellers. But the probabilities are there if we manage to close this particular candle back inside it. You can always front run these if you have a strong level, which we kind of have, but at the moment it's still rather early. I did try running in Asia. This is where this little TP has come from, the positive, basically it's a scratch. So I tried to run my Asia trade, didn't really go anywhere, so I decided to just close it just above scratch and go to bed. So I haven't looked at anything since. We're gonna have some time to figure out whether there is a pre-market COMEX trade on one of the metals. Which metal? At the moment I am leaning towards copper, but it remains to be seen. Now, yesterday there was some issues with the LME, London Metal Exchange. They had to halt copper and aluminium trading because of some electronic issue that happened. Whilst the prices carried on printing on the actual ring, unfortunately the electronic side of things suffered a technical glitch and it was out for like 3 hours. So now it's back. So that was like a temporary thing. But in the last several months, LME has suffered quite a few technical glitches because the volatility in the metals across the board. If you don't know enough about LME, it's one of the biggest, if not the biggest exchange for industrial metals, so base metals. Things like copper, aluminium, zinc, and nickel are generally widely traded on the LME. Now, out of all of those, we can only do copper because that's the only base metal that is offered by the CME, and therefore that's why Topstep offers it as well. So yeah, obviously we need to still be careful. There is still a sign of a risk off and a big correlation between crude oil and equities, but metals are kind of in the mix there too. So still headline risk. Here's the thing, tomorrow we have a big day of the FOMC and a whole bunch of releases, and I wouldn't be super surprised to see the markets a little bit quieter and choppy. Some of the equities have rolled into a new contract, into a June contract. So we have ES and NQ rolling into the June contract. Let me just check YM quickly. Yeah, even YM has rolled. We're also going to have crude oil rolling. Now, it hasn't rolled yet. However, RBOB has rolled. So RBOB, if you know me, I trade the gasoline futures quite a bit. Gasoline is rolled into RBK. So it was RBJ, now it's RBK. But if we look at crude oil, and I've looked at this on the CME website as well, it's still in the April contract, so it hasn't rolled yet. And same thing with heating oil, it's still in J contract. So just be a little bit careful with the energies markets because of this. Natural gas usually rolls later. And it's been a little bit quiet. We're coming into the part of the year where, you know, spring is starting, so I typically don't really like trading natural gas for that time of the year. And if I do anything, it's probably going to be either in microcrude, maybe gasoline, but it's pretty volatile at the moment. So for now, I'm just going to go to microcrude and stay on that. Right, let's have a look at what's going on in gold, since this is the metal markets primarily. So the gamma flip has actually moved to 5,000 from yesterday. If we go lower, the next major area would be 49.50. Again, headline risk. Gold is very sensitive to it. So I would suggest keeping financial juice at least on one screen and just having that in the background, just in case you see some red things coming in and you notice the market starting to jump around like crazy. That's usually an indication that some sort of news has stepped into the market, and you need to find out what is going on before you plow in with new positions. So don't FOMO in, don't go, oh my god, I need to be in. Just breathe, find out what's going on, and then make your decision. Now, when it comes to any profiles, let's have a look at what the COMEX profile is doing. The distances between the value areas have diminished between Friday and yesterday. But that doesn't mean much because Mondays can be a bit quiet sometimes. Inside the COMEX value from yesterday, so not really looking that great at the moment. Sometimes the inside value price action can indicate a change of sentiment. So if we've been going down, start seeing some buyers and we're not in a neutral day type, and you see a very quick exit from the value area already in the first sort of half an hour of COMEX, that would indicate the rejection of value, and then maybe possibly the reversal and a continuation to the upside towards this next area of 5100. So we've seen this 5100 level being relevant for, you know, a week now, and that has not changed. The only change is that now it's at a slightly different location compared to where the price action is. So this is how I find my way usually in a day. So the price action will be whatever it does. Like there's like a million ways to look at a reversal or a continuation or a range, but the orientation points will always stay very similar. For me, I always have the same orientation points. I have the average ranges, have the gamma walls, maybe some VWAP, even though VWAP and something like crude oil, generally not that important. I don't know why, it just tends to ignore it. We never used to do anything with VWAP, but metals are pretty sensitive to VWAP, and I think that's because there's a lot of institutions that use VWAP as a weighted area of coming up with like price fixing or settlement price, or something similar. So just keep all of that in mind. Raphael says, took the gold short during Asia. May take one more trade today before locking out. And enjoying the sun. Yeah, that's a great way to be. Do your job. Like, we don't get paid for the hours worked. I want to stress that. We get paid to be correct at the correct time of day. Now, I get a lot of criticism for not doing a lot of trades, but I honestly think that a lot of YouTubers have kind of ruined trading for people, because everybody expects as soon as we jump on the stream, you're going to be clicking buttons like, somebody's chasing you. And that's just not the reality of trading. I know it's good TV, but, most of the trading is about levels, about waiting for the correct setup. And for me, it's also about waiting for the correct time of day. One of the things that I like to do in the overlap, so it's a little bit early still because we're in a weird daylight savings twilight zone mode where the US changes their clocks about 3 hours before England and the EU. So now there's like literally another 10 days or so before we change our clocks and everything goes back to normal. So right now this stream is slightly earlier in England than it should be, but we're going to be going back to that at the end of March. 28th of March is when we go back in time. Yeah, the clocks change for the summer. And then we become British summertime, BST, from GMT, right? Right, so gold did its test and slight swipe under the 5,000, bounced immediately up above it. So for now it seems to be still supportive. I'm going to have a look at Bookmap on my other screen just to make sure that we don't have any massive shorts stepping in. Just going to wait until that loads a little. And what is London doing? Let's see. Yeah, so London has extended the initial balance into what we like to call a normal variation day. Why? Because the initial balance is only small comparatively, and then the market went into an extension of twice the size of the initial balance. So why does that matter? Well, because a lot of the normal variation days can bring forth the sustained auction and a continuation. Now, there is another thing that happens in commodities, that if they hit these big levels, you can get a setup that is actually my setup. It's not really a Dalton concept, it is a D concept. It's called an auction fade, right? So you hit a relevant level further away, and then the market starts to return to wherever it came from and goes all the way back to the initial balance edge. Now at this point we also have VWAP here. Again, a little too early for that. I typically like to do these sort of setups into COMEX settlement, or at the very least the London close, or right after the London close. So it's a bit early for it, but not impossible, because we have a whole bunch of demands in this area. We have something called the Q low, 4 hour Q low. That's like a lower quarter of the relevant swing that we had prior on a 4 hour time frame. So to me, this wouldn't be a straight up sell it if it goes below 5,000. It will be, again, another one, sit and wait, and maybe if we retest, like let's say we fall all the way down, then it retests 5,000 from the back end, then I might turn into a seller. But for now, gold has been very supportive at the 5,000 area, and it seems really resistant to go anywhere. Every time they dip below it, something comes back. Someone comes in and buys it back up. We also have a bit of a lower quality demand here. This is a daily chart now. So it's sitting right under the 5,000 level. Yesterday we were not able to bring it any lower and ended up the day as a doji. Dojis are a bit dangerous because they can mean change of sentiment, and that means that we could just bounce away from this area. But again, everything is anchored to the headline risk. So if they say something that is positive, then you will see gold just smashing down $50 in like the blink of an eye. So it's still very, very volatile. Therefore, I'm just using it as a benchmark. I'm not actually trading it outright. I'm just, using it as a guide, usually for silver trades. And I still trade silver. Maybe not every day, but I will find, a trade here and there. Usually either during Asia or very late in the day, like after COMEX settlement, because there's still a lot of movement, but the market isn't as crazy. And I know that I run these streams, but I've always been more of an end of day trader than like, go ahead, the open, let's go. I avoid the open like the plague. Because I'm a mean reversion trader, and usually I like to hold my trades until the cows come home. So I like to look at bigger swings, and that means lower frequency of trading. It means patience, staying in my positions for at least 2 hours, sometimes longer. It's not super unusual that if I identify a swing that I'm going to stay in it for like 4 or 5 hours. Alright, let's have a look. Reese Moy said, woof woof. Yeah, I'm pretty sure you're going to hear one of my dogs barking at some point of this stream. Shikari is saying, what is my opinion on ICT trading? Well, considering I started 20 years ago, he talks about the valid concepts in a bit of a chaotic way. Like, I think he overcomplicates concepts that have been around forever. Like, for example, I don't claim that I invented market profile, but I do claim that I've made a couple of twists on it to suit my markets, commodities, and therefore that's why I have the market stalkers method and not Jim Dalton, chewing through the concepts. Some of them are similar, but obviously we trade very different products. He's an ES trader and he trades options. One of the things that, and don't get me wrong, I completely respect Dalton. I love what both him and Steinemeyer have done for us. But I feel that ICT concepts are kind of like that. They are old concepts that have existed for a million years, right? We had Wyckoff way before ICT came up with whatever he calls it, distribution manipulation, and then it's like, stealing things from Linda Raschke, like turtle soup. ICT did not make up turtle soup, she did. She was a part of the original Turtles, if you know the story, and they were taught to do longs on breakouts on single stocks, and then they would hold them for a long time. They were mainly sort of position traders. Not maybe years, but definitely like 3 to 6 months. And then she came up with this concept where she noticed that when you have a failed breakout on this turtle trending concept, which involved Donchian channels and some moving averages, she called it the turtle soup because the turtles would get screwed, right? So and then he took that and he's like, oh yeah, and then everybody, even though he gives the credit, everybody thinks that that's his concept. So from that point of view, I do not look at ICT as something that I'm going to use, but his FVGs are very similar to single prints. They're basically strong candles that leave some sort of a gap behind, and you can actually see that not in the price action but very easily in the volume profile and TPO profiles, right? So if I were to do something like this, you will see that first and foremost we have a very big single print that was created right after Tokyo close and leaving a single print behind. A lot of you will call that an FVG, right? what is the expectation? The expectation is that this was a quick move with not a lot of volume in it. So when the prices retest that, you can expect a continuation of it. Can they be closed? Yes. I don't know whether things like closed out single prints and inverse FVGs might be the same thing, or broken FVGs. I don't even know whether that's a thing, but single prints and closure of single prints is something that Dalton and Steinmeier taught since 1986. So because of that, while I do think those concepts are valid, I do think that he overcomplicates things, and it's not a cohesive concept. It's almost like a bunch of trade entries and some context for you to figure out, and that's the bit that I don't like. Whereas the profile is a complete cohesive concept where you look at the previous day value, you look at the current developing value, you look at volume, and then some of the things that he said over the years, like, oh, the volume doesn't matter. I think that's the worst thing to say ever. Like, everything is volume. So how can you say that it doesn't matter? And then, there's other allegations where he makes a lot of promises. He's never actually proven to anybody that he can do whatever, but the concepts are valid. So let's leave it at that. I'm not against it. I'm just not somebody who will use those, because I'm using something that I've been taught that were the original concepts that I resonate a lot better with than, PD array and a whole bunch of new terminology that is basically the same thing, and stealing concepts and repackaging them and then slightly changing them. So everybody changes concepts. Nobody takes a concept and go, yeah, this is just how you use it, the end. Everybody trades different products, right? I trade commodities. Of course, the profile is not going to behave in the same way on ES as it does on crude oil or copper or elsewhere, so naturally you will modify that. But I felt that I figured some stuff out myself, and I needed to tell others, which is the reason why I was asked a lot of questions by a lot of people. And eventually I started putting concepts that I figured out online. It wasn't a course, it was just like for my junior funded colleagues at the time. It was a brick and mortar prop firm, but then randoms started finding that and asking me a lot of questions, and it became a bit too much. I just didn't have the time to answer everybody's questions all at once. So eventually that morphed into a course. I didn't set out to create one. It wasn't some big calculated thing. It's like, yes, I'm going to create a course and make $1 million. It wasn't like that. It was just like me trying to do dinner with my husband, and then me answering a whole bunch of emails, Skype chat. I was very open to chatting to everybody at the time, and we're like sitting in a restaurant, and I'm like on my phone just trying to answer a whole bunch of questions. So he's like, what are you doing? and because of that, I decided to make my time a little bit more efficient, and that involved putting the concepts online. It still wasn't a paid for course, but over the years, then I got a lot of time wasters, and they wanted a lot of stuff for free. So, it goes both ways. A lot of people say, oh yeah, course sellers are frauds. But people want everything for nothing. And you give them a hand, they want your arm and the rest of it. And they try to get as much out of you as possible for nothing. And yet, anytime you try and help someone, it comes at a great deal of like emotional involvement, because you want people to do well. And then if you don't give them an incentive to learn, all you're going to get is just people not really paying much attention anyway, but bothering you with a bunch of questions whilst not looking at the videos. So that's why it's behind a paywall, right? That's the only reason. I just got sick and tired of time wasters, and I pick and choose who I work with these days. It's a very small crowd, so it's not there to basically be, oh yeah, this is me, and this is a course. It's literally just there to be offered to people who are serious about learning, and you don't get that when you offer things for free. So that's been my experience in the last 8 years. So do with that whatever you like, but it is what it is. I offer a lot of stuff for free. I do these streams on Topstep. I do my own streams on Thursdays for free. I do a ton of videos and concepts. I don't gatekeep. You can completely reverse engineer everything that I do if you can be bothered. But there is an easier way where we talk about the structured concepts and structured setups and playbooks at the right time of day. And it is proprietary, especially the time of day stuff. I genuinely think that the biggest thing you can take away from me is the time of day as a level concept. But yeah, so because of all of that, I don't really mind ICT. I'm just not somebody who trades it. Let's leave it at that. Right, big nice push and a little shakeout. Was that a sweep? It was a sweep on copper that I just saw. Let's see how the cumulative volume delta decides to act. So it's still a little bit too early. It's only 11 o'clock. We still have 40 minutes until the LME opens. That's usually the time when you see the mean reversions. So it's a waiting game at this point. But we're still above the gamma flip at 575 on copper. Just gonna extend my profiles here. And if they dip lower, no setup. I really wanted to bounce outside of the TPO value and effectively go into a failed auction, preferably not extending the initial balance by twice the amount, because the failed auction, even if you get to, let's say, an extension that is the same size as the initial balance, that introduces issues, right? So initial balance is roughly about 51 ticks, and then if it goes all the way down into what we call the normal day type, then what needs to happen for a failed auction? Well, you need to have a hybrid of an auction fade into a failed auction. So at that point, it's kind of better to just take a scalp to the initial balance low and call it a day, rather than to look for some like big move in the other direction plus the extension, and you're kind of going like this. Oh my God, it's going to be such a great trade, and then it doesn't go past the initial balance low. Well, that's one problem. Yeah, the OP. I'm not gonna read that, but yeah, I agree. Yeah, there's issues there. There are some issues. I get it. I'm sympathetic to people who have certain issues in life. I'm on the other side. I'm not. Like, I'm so realistic whilst being optimistic, and I'm probably one of the most stable people in that regard. Like, I've never had I've had a life where you could have easily fallen into depressive and other mental health states, but I just don't. I don't see a point of like wasting your energy on like, oh, I'm feeling sad. It's like, yeah, join the rest of the world. Just grow a pair and carry on. Dust yourself off. Don't over dramatize. And keep going. Do you think trend lines can be useful as they signify directional changes? Say on the 30-second chart intraday. Well, definitely not on the 30-second chart. Daily chart, yes. 30-minute chart, yes. 30-second chart, I would argue that any trend line you can draw on that, it's just noise. So get off the 30-second chart. I use the order flow on Bookmap. I don't draw trend lines on it, but I do use it to look at CVD, which is cumulative volume delta. I look for the big bubbles to see whether big institutional volume is coming in. I look for sweeps, I look for absorption, and I also look for consecutive reversal in those tiny little bubbles time frame, because it's not even a time frame, right? The order flow is like real-time orders going through. But 30-second chart, it's like I don't really see the point of looking at a low time frame that doesn't give you the volume component, nor do you know whether these, movements, because, if you look at the candlesticks without any volume, let's go to this 30-second chart, but we're going to have to do something like GC, because a 30-second chart on copper is not pretty. Because it's not a speculative product, so there's not enough movement. So, like, if you're not looking at volume, all of these candles look the same, right? They look like there's a trend there. But if I go into Bookmap, you will notice a couple of things. That only the buyers are the ones who have any juice in them, right? For now, anyways. And you can see that the cumulative volume delta has shaved off a decent amount to the upside, and if you scale out, you will see that it dropped, but now it's trying to recover. So if it goes above sort of this cumulative volume area, which means 5,009, 5,010 would need to break to the upside, then we might have a serious uptrend. Until then, you're just kind of looking at tiny little traders who are maybe selling things. And if we were to do a trend line here, you would be saying, we've broken a trend to the downside, so therefore I'm going to keep selling it. I mean, it might work maybe on like a super small, tiny ticks, but I always think that the people who are beginning to trade, they're the ones who gravitate towards really tiny time frames. And I still think that tiny time frames is an excellent name for a band. But yeah, I look at 30-minute time frames for a couple of reasons. TPO profile is mainly to be used on 30 minutes. And then anything else, how we're approaching a level, whether we're losing steam or not, that you can only see through real-time order flow. And this is why I switched to futures in 2013 after trading Forex since 2007. And I've never looked back, because you get to see behind the scenes of what the intention of the people actually are. And it's real institutions. It's not like some nonsense broker volume that's just like, yeah, it's just all of our clients. It's you can see institutions stepping in. You can see whether that particular level is of any interest to institutions by the size of the volume and bubbles. And yeah, so to me, trend lines, if you're going to use them on 30 minutes, 1 hour, 4 hours, and dailies, but I personally look at the market horizontally. Back in the day when I was a supply and demand trader, just on the daily chart, I did have this concept of matching, let's say, the upward trend line with a fall into a demand area. So let me see if I can find you an example of that. I don't know whether I'll be able to, but let me try. Let's see if I can find a good trend line first. All right, so I can kind of see one. It's not the best example, but let's just, you know what? Let's use this starting point, because I think this one is maybe a little bit better. So let's say that you are looking at kind of 3 touches. Again, this is what I'm saying. It's not the best, because you're supposed to have, maybe let's use the open and close, because this could be a better option. Because there's 2 ways, you need 3 touches. Some people go for the extremes. I used to like using the kind of a mix of the 2, because I always thought that the trend lines were a bit wishy-washy anyway. But let's say that you have a trend line, you have 3 touches, and then you start seeing that there's a demand area here, not the best one, but kind of usable. There was some distribution here. Then it turned into reaccumulation, and then went higher, so it's just about acceptable. And then you could see that there was a test of the demand area. So usually I would be looking to enter those kind of swings and hold them for a few days. But you can also see that we had yet another test of that closer to the demand area. Eventually, I just realized that I don't actually need a trend line to see this, so I stopped using that. And for me, breaks of trend lines in commodities are not nearly as reliable as they are in something like the equities, because equities tend to have a stronger trend. If you had a really good trend, let's say something that's not like super steep, but it's still a decent trend. This was all very steep, but let's maybe have a look at this. And again, wishy-washy, right? We sort of have 3 touches, but this one is kind of chopping. I'm a data-driven trader. This sort of price action is, it's like, why are we considering this as a trend? It's like, okay, great. So this trend, longer term trend that has been going on and on and on and on and on, and you can kind of project it as far as you want. So you can say that maybe in the longer term picture, if we get down somewhere near this trend line, you can also match it with the moderate call wall that we currently have at 4,800, and that's been popping up for the last sort of, I don't know, a week or so. Suddenly we started getting a little bit more interest from the options guys at 4,800. So you can match that. You can match this bounce demand area in an extreme volatility side of things to say that, well, if we touch 4,800 and there is a long-term trend line there, it should hold. So that I'm in favor of. 30-second trend lines, I don't know. But personally, I don't use them anymore. I used them in the first 5 years. Don't use them anymore. Right, so we're getting a little bit of bouncy here on the copper, so I'm going to try one long, and this one, it's got enough room for me to start scaling in. So I'm just going to do my projections here. A couple of things that I'm going to do to clean up the chart though, because I'm not needing all of that. Alright, starting with 4 micros, I am intending to go into scale in. So this is 1, then we're going to go 2, and I can only do 3 because of the restrictions, and 26. So those are my scale ins. Now I'm going to keep this to the original 2R multiples from the core position, and we'll see whether we can get some push from this particular area, because it is trying to fail the auction. The previous TPO didn't work. This one is a little bit better because we've had some initiation from the cumulative delta finally, but that can also run out of steam, right? So we need to keep having people who are pushing higher, and this is the time of day when probabilities, so hear me out, probabilities of continuation versus mean reversion are pretty much 50-50. 47% for continuation, but let's call it 50-50. Now, the reason why I choose the mean reversion, so to go back the other way over the continuation, is because the mean reversion tends to have more ticks in it, so it kind of goes further. That's what we call the maximum favorable excursion on the actual price action itself, not like your own performance or anything like that. You're just literally looking at the size of the swings at a particular time of day. So because it has more juice in it, and by far more juice in it, typically it goes on average by 53 ticks. That's an average, which means that on some days in the right context, it actually goes for much, much more, like 200 sometimes. So that's why, even though this is a 50-50 probability side of things, I'm choosing a bounce back the other way, right? So it could fail. This is why we're in with a core position of 4 rather than 7 all in, to make sure that if the probabilities don't play out to the maximum favorable excursion of 53 ticks or more, that we don't get hit by 700-800 loss, but instead you only take 275 on the core position. So a lot of a reduction in the loss side of things. And I never look at, oh, how much money can I make? I'm always thinking, how much money can I lose today? The take profits sort themselves out, right? They're easy for me because I pick the locations that have a lot of probabilities of pushing in the right direction. They're low enough to give you a natural reward to the opposite side, and they're usually far enough away from the other side of the swing to give you a really nice risk reward. So it's not, it's not always the case, because if you end up in a range, all I'm gonna have is just literally like a 1R multiple. And I do that on DAX a lot, where even if I have a mean reversion short trade, knowing that DAX is an equity index and that it always has a strong upward bias, and I'm short, I will typically take the 1Rs. I don't shoot for 2 and 3Rs. My thoughts on how GC moves. I will be honest, Dark Patterns, I'm not too happy with how GC moves these days. I've traded GC since, pretty much the same time as crude oil. So let's say that I really started trading it when I met Hogue, but I was still doing, a reasonable amount of trading in gold in 2013, 2014. But, meeting Hogue was the thing that put kind of GC on the map. And I traded it for a long time. It was always like a battle between crude oil versus gold. Like, which one is my best performing product? And they were tag teaming. But then in the last sort of 3 years, gold has taken on this like speculative character, and it's starting to look very bouncy intraday. What does that mean? Well, when I look at it, especially during COMEX, like now it's in Asia is actually pretty calm, but when I look at it during COMEX, it's all that like psychotic up and down, and then a lot of wicks. I decide. It's like undecided price action that does my head in. I'm 45. I've been doing this for 20 years. I don't need that shit, right? Let's be honest. So I'm looking for things. I'm just going to let Bernard out because Bernard is jumping on the door handle. He's going to learn how to open doors soon, that boy. So I'll be right back, like literally 2 seconds. All right, we're back. Yeah, so for me, gold right now is not really what I want out of a product, right? I'm a systematic trader, Vicky Trades, as much as I can be, as someone who's a human and not a robot. But I have done, like, one part of my business is all mechanical trading algorithms, and we actually have a company just for that, where we do lease some algorithms to institutions, but that's not affordable for retail. Let's put it that way. And a part of my job on that side is just to like switch things on and off. I'm basically just a quant strategist. It's like, okay, well, I'm identifying that today we're underneath the Asia, so maybe the Asia smash and reverse algorithm is not the one to run today. Right? Maybe we should be in more of a trending algorithm side, and then I will switch those on. Or, if I have an algorithm that runs a mean reversion on crude oil, but when crude oil for 2.5 years was super slow and it just wasn't doing anything, I actually switched that off and didn't switch it on until very recently. So, but as a human, when it comes to sort of this stuff and prop, you can't really claim that you're fully mechanical, because I'm not a robot. I still have a lot of discretionary decisions as to when I'm going to go in. I'm an order flow trader, so I look at tape a lot, and sometimes I will front run a failed auction like right now, and other times I'm going to wait. So that's discretion. There's no doubt about that. So I guess I'm as systematic as a human can be. By the way, guys, I have 8 dogs, and I'm just a dog doorman. So now my old deaf cavalier wants to go out, so I have to go do that. Be right back. So what is my job? Dog doorman. That is it. A butler to my King Charles Cavalier and the others. Yeah, so when it comes to my playbooks, though, Vicky, they're very systematic. So I'm never going to be like, oh, I don't know, I just think it's moving, so therefore let's jump in. I need to identify the playbook. If I can't identify the playbook, that's my sign to just stay the F out, right? So let's say that we have a day where we sort of have an extension of the initial balance by the same size, but it's kind of doing a reversal. And I'm like, well, I can't define that because the profit margin for, a smaller extension, it's basically the nearest edge of initial balance. So I know what it is. I just don't think it's worth my time, if that makes sense. And I don't really have a setup. I suppose you could call it a smaller auction fade, but at the same time, to me, it's a waste of time. Does that make sense? Hopefully it does. And then also, if we have a big sustained auction and there's no single prints though, everything is kind of overlapping and the auction is weaker, I actually have no way to get in on that. I have a way to get in when there are single prints left behind because I use that. It's sort of like a mini demand area intraday. But if that's not happening, then I'm just like, where do I get in? I don't know. It's not a gamma squeeze. It's just a slow bleed upwards, or slow rise upwards, however you want to call it. And to me, I don't have a playbook for that. I'm just like, well, let it go without me then. Don't care. Do I scale into DAX trades in a similar fashion? No. So I trade DAX on my own account. I still stick to, because remember, trading personal accounts and trading prop, they're 2 different games. Prop has a very, very strict amount of risk parameters and things and it's getting stricter. Across the board, all prop firms are trying to stop sim farming, okay? So the gravy train of doing stupid things and getting away with it is kind of coming to an end. I'm happy to see that because I will be perfectly honest, I think it affected my mindset in prop as well. Suddenly you see these people who are like, oh yeah, I went to 15 contracts. And then I started thinking, am I actually wrong to not copy trade, to not full port and blow up some and then hit on the others? Am I wrong? So maybe I should be doing that as well, right? These kids might know something I don't. But now it's coming to light that a lot of them did really dodgy stuff. And to be honest, I'm happy that we're going back to how it should be. We're going back to building true skills. We're going back to not sim farming and not just, full porting for the sake of a payout. So full port one day, it hits, and then you size down massively, and then you go, 150, 150, 150, and then you get the 30 grand payout. That's exploiting the system, right? That is never going to work in the live markets because you don't have this endless try and try again. So for my own accounts, they have a sizable balance and I can run my old style of doing things. Like I have a zone, I enter one trade at the area where I'm identifying the playbook entry. Then I do one when it dips a little bit into it because I always expect a little bit of drawdown into a position unless we have some mad mean reversion from, a bounce of a really strong GEX level or something. And those are rare. And then then I would add another one when I'm roughly about 15% in profit from the size of the stop loss as a guide. And I'm saying percentages because the stop loss sizes will be different. So for example, when DAX is slower, I'm typically using 35 to 45 ticks. Now DAX is moving in a pretty wide range, so I actually have to use between 70 and 85 ticks. And you know, if I say, well, I add on every 15 ticks, that's not strictly true, because that is going to go different, right? But for prop, it's really important to me at this point to try and minimize the drawdown so that I never get to the shoulder tap XFA. All right, we were tagged into 1, so we're now in with 5. And I'm going to add the stop sell here. Just a little bit higher than the other one, but pretty much keeping it the same, because I'm not afraid that it's going to come back on me. Even if it does, from what I've done like this last sort of month, that's a rarity, right? Even if it does that, it's some kind of news that hit, and sure, it can happen because we're in a headline risk sort of situation. But this is a, you know, reasonable push now. So I don't like to overmanage my trades either. So yeah, to finish it on the DAX and personal trading, I still do 3 minis, and I still do 1 at 1 entry, 1 at slight drawdown, and 1 in profit. But that does not translate that great. Like, don't get me wrong, it works, but it's just the drawdown on drawdown days, because you're pretty much in immediately, and even if the thingy doesn't work out, you end up with the biggest loss on your core, like on your default position size, which is maximum, right? So I've changed my tune to all in, then maybe scale out. I'm trying to do something completely opposite here. So I'm starting with a multiple of micros, scaling in if it starts to move my way, and if not, taking the hit on the core position. So instead of taking the hit on the things that don't work out on 7 lots, mini micros, I'm taking a hit on 4, maybe 5. You know, maybe if I get tagged in 1 and then it turns around. But that's still a lot less than 7 or 8 or 10, right? So that's what I've been practicing. It's a very difficult thing for me to change because my brain immediately defaults to what I've been doing for 20 years, right? So it takes a little bit of time, but I'm getting more comfortable. One thing I've noticed, the 3rd and 4th scaling, which I should be doing, but I can't because we still have a restriction on the amount of contracts that we can trade on copper due to the volatility. The 4th one. So the 3rd one I'm just about getting okay with now. The 4th one, which I usually do on natural gas. Oh my God, it's terrible. It's just so uncomfortable to me. And I literally have to like soothe my inner scientist to go, it's okay. It's only a 6 tick increase in the average price. You can handle that. It's okay. It's all within the data. Stay with it. Stay with it. So that's my own battle that I have to deal with. But so I'm effectively doing topsy-turvy trading. What I've been doing for 20 years, scaling in a slight drawdown, but in a zone and still within my maximum default position. And then the last one, scaling in when it's in profit, I'm doing the opposite. So I'm staying in a core position until it moves my way, then scaling in 3 or 4 times and keeping it. So it requires a mindset shift. You know, I am generally okay with mindset shifts, but this one, I'll be honest, it's been a difficult one to change and to become like the new normal of how I enter trades and just to kind of relax into it. I don't know whether I'm still fully relaxed, but I like the data, right? I like the fact when it hits like in this situation, because again, I'm missing 1 here because of the restrictions, but in the situation where I scale it into all 4 and then it hits the original 2R multiples, that's like 1.5K. Now it's more like, I would say it's more like 850, 900, but you know, it's still a lot more upside whilst minimizing the downside, because when I get smacked in the face, that's 275, maybe 340. Very rarely in the last sort of month and a half did I find a situation where all 8 contracts would just run over. There was one, but all the others seems to be working pretty well. The scale-in points are data-based, so they're based on somewhat of like swings and trying to avoid the reversal points. So how much does copper trend in one direction once it turns around? And where is like the sort of a safer way to do it? So even if you take, like for example, this sort of move, if we measure it, that's like 139 ticks when it runs before it turns on you. So that would be one data point to measure. Then you look at another one. So where did it turn around from? How much does it run for? 150 roughly, right? If we then look at this one's going to be smaller. When it turns around, how much does it run for? 140. But when you run this automatically, it's going to take literally every single reversal. So this one is a 97. Then, I mean, the system is going to run this one as a reversal as well. So that one's very small. It's 90 minus 35. Then this one is a bigger one. So again, 160. So 140, 160 when it does turn around. But with a few of others, that number falls down to about sort of 83 roughly. So once you've passed, actually when we're in slightly less of a volatility environment, I think the number that it gave me was about 60 ticks. So once you get past 60 ticks, you can't scale in more, because that's the dangerous part where you're exposing yourself to the MAE, so the maximum adverse excursion, so going back on you against your position. And of course you can have a situation where you think it's reversing because it's the wrong time of day, and then it just drips all the way down. But in that case you entered here, and then you might be wrong on the position, but it never tags you in, right? Because it doesn't go far enough to tag you in, so you only lose a core position. Does this make sense? Let me find the... Yeah, so assuming that you enter a position that doesn't work out, you will never be tagged in to the rest of them. So you only lose a core position. Maybe one tag, maybe a 5 lot. Is the time and sales data along with the DOM data only from the Topstep X platform? No. So this is futures, which means that all the orders, all the DOM information, that's coming from the CME exchange itself. Futures are a centralized market, which means that everything goes through the same exchange. So whichever brokerage you might be using, whichever prop firm and the data feed you might be using, if you have level 2 data that is coming directly from the CME and everybody's got the same data, okay? That's the beauty of it, because you can actually see everybody, banks, market makers, you, me, your mate Dave down the road, everybody on the futures markets sees the same thing and is participating on the same exchange together. It's pretty exciting. Like, I love the idea of that. That my positions in the live markets are the same positions that, you know, JP Morgan might do in their futures trading efforts, right? It's pretty cool. It's pretty cool. Why So Serious says, you got me into trading copper and now it's one of my favorite markets to trade. Thank you. You're very welcome. It's one of my favorites as well. It's very manageable. It's like, it can be crazy, right, some days, but most of the time it's such a beautifully smooth product. It gives you plenty of time to think. It runs properly when it does run. There's no drama with it. It's just, I love it. And it moves enough to have that sweet spot of like 200-300 ticks a day, and it's done. Now, come July and August, copper does slow down a lot, so it's a little bit like watching paint dry. At that point, I usually shift to like either options or I just stay away from it. But it becomes more a matter of looking at larger time frames, and swings intraday becomes really painful. So just be aware. I don't know how long you've been trading it, but just be aware of that. Dry up period, the menopause period for copper. How do I set limit orders on Topstep X? Okay, so you can do it via... I know that there's a way to do it on the Dome. I don't know why I never gel with that, but there is this order component, and there you can set the limit order and you can set the price. So let's say that I want to set another limit at 581.90. Whoops, 581.90, and then it needs to be a sell. So I will sell it. What did I do? MHG 58. Oh, yeah, so I put it all the way up here. Yeah, I put the wrong price. But yeah, so that's how you sell it. It would be nice if I actually put the right price. But yeah, you can see it. So that's the limit. Let's try that again. Remove it. Put it there. That's how you place the limit. Okay. I'm actually going to put another limit order here. So that to me is the easiest way. You can also do it on the chart. So you can right click on the chart. You can do limit sell 1. You can do that as well. But, you know, just depends. There are multiple ways you can do it. So you can do it on the chart. You can do it through orders. And you can even do it on the Dome. It's just I always... Because I use multiple platforms and I always forget which one is the right click, which one is the left click. So I just don't want to do that. Oh my God, we have GOAT himself. John Hoagland has joined us in chat. Good morning, John. Good morning, John. What a privilege. It's amazing. Good morning, good morning. VLP Return says, D is right, it's definitely a lot cleaner than stocks. You just have to decide if you want market by order or market by price, level 2 data. Yep. Dave says, thank you. PS, I still use 3 micros max. That's on DAX, correct? If you're on a 50K, that's absolutely fine. And, you know, wherever you are. Or if you're in your own brokerage that doesn't have, you know, £1 million in it, yeah, 3 micros is absolutely the appropriate thing. Because Dave is one of my market stalkers. So he's a pretty awesome dude. And trades DAX. So... yeah. Right. Thanks. I didn't know about the slowdown period for copper in July and August. I'll look out for it. I only started copper a month ago. Yeah. I know. Hoag. Hoag joined us. So amazing. I need to get... I know Hoag works a lot, but I do need to get him on my show one of these days. How do I determine the gamma levels for the metals? Okay, so there's this bar chart with delayed options activity, which is probably good enough, but you would need some sort of AI to crunch things for you. So the first step would be just to have a look at the open interest areas. Now I go a step further because my levels, if you noticed, I don't have all of them. There's a company called MentorQ that does the gamma level weighting. So GEX 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and then they also do gamma flip, which they call HVL, and they also do put walls, call walls, and gamma walls, right? I'm not going to go into what all of those mean because we're going to run out of time, but just know that is a good starting point. I have another way of finding anchors. You will notice I don't have any old GEX level on my chart that has... you know, more open interest. So for me, even though on copper, we do have 578, we have 580, we have 583, we have 585, we have 587. It's a ton of, you know, different GEX levels with some open interest there. But my interest is something that has implied volatility per strike as well as a good amount of open interest. And there's like 3 different things that can happen in that situation. You can have not a lot of open interest there, but high impact of the implied volatility. Or you can have a lot of open interest, which technically means it's a put wall. However, the implied volatility per that strike is not a lot and therefore more prone to just slicing through it, right? So there's like anchors that I use that are in addition to the analysis that you just get from the plain sort of dark pools, as they're called. But yeah, mental cube, bar chart, anything where you can drag out the options chain, that's a good starting point with options. If you're doing it yourself, you will need an AI. I like Cursor because I do like multiple file systems. So to me, ChatGPT just doesn't cut it. And it doesn't have high enough reasoning. So I prefer Opus 4.6. And I, smush like 3 or 4, like this whole entire projects that I do in Cursor. And I try to make them as modular as possible. And for the options activity, I have, I think, 3 or 4. So one script is to measure implied volatility and to track it day by day. Another script is to actually take in the open interest and then to match it up with the implied volatility per strike. The third one looks at where the gamma walls are, so it weighs how the gamma wall is. And then I have another one to measure the gamma flip. So it's a lot. But yeah, to me, it provides me anchor points. And if you've been here for a hot minute, you know that some of these big levels that I drag out, they are usually areas of interest. What you're going to do with them, I don't care, right? Because they can be gamma squeezes as well. Let's say, we get to 5100, something comes out that's negative news-wise, they're going to go into a gamma squeeze. So these levels are just levels of interest, like anything else that we do here, right? We're not saying, to go short, to go long here. We're not doing that. We're just saying these are anchor points where institutions are bound to do something. They might adjust inventory. How they adjust inventory, that's entirely contextual. Whilst most times there will be some hedging there, it doesn't have to be, right? So they can use those levels as a gamma squeeze, or like, for example, 5,000 in gold is a gamma flip level. So if they go below it, gamma flip becomes negative gamma, and then all hell breaks loose. So in that case, this one here, 49.50, is, even if it brings a bounce, it's probably going to be overshot by like a million ticks before they bounce it, making it a little bit tricky to play. But that is the level. So what you do with that is entirely up to your way of trading. I know what I do with my levels, and this is maybe a decent guide of how things work. But for example, similarly on copper, gamma flip right now is bringing some reversal into the mix, but at the same time they're being a little slow, right? Gamma is okay, so with positive gamma, so mean reversions are expected. But then if I look at the cumulative delta, it's mildly positive, but the volume is decent, and the amount of volume coming through is also decent. So I'm willing to, stick with it and to go. So far, it doesn't look like they're running out of steam. They're just being slow, and that's okay. That's within the copper personality as well. So you have to be patient with copper. Copper is not like NASDAQ. You don't enter a position and you immediately know whether you're up or down. It's not like that. It takes time to develop. I hold my copper trades anywhere from like 2 hours up to like 6 hours. And I've been known to run some Asia trades in the right context that's coming away from like a bigger swing. I run that for like 10 hours, 12 hours in my own account. I call that account my YOLO account, even though it's not really YOLO, it's my version of YOLO. So it's like, trading a little bit larger than you should be, but then also not doing a million trades per day, just doing like one, and trying to get as many ticks as possible on the day. What expirations do I calculate off of? Whichever one are the nearest. Because the nearest you get to an expiration, if there's like a gamma wall or a big level with open interest, there's a chance that the hedging around it becomes more pronounced. But that doesn't always translate into a big move, you see. Sometimes if you have, like, I don't know whether we have something that's sitting in a gamma pin. Let me scan. Let me do a scan. Nothing in energies. Nothing in equities either. Yeah, suppose let's say that we get to DAX at 23,750 because that's the nearest gamma wall. The pronounced hedging could happen in the form of gamma pinning, which means they get there and then they just chop and chop. But that's like extreme hedging as well, right? So you need to understand the function of what is happening. And, you know, when the new contract rolls, then it's very likely that the hedge is pretty pronounced as a nice swing. But the closer you get, and the more bunched up open interest levels you have at that area and that zone, the more of them, the less likely that you're going to get a smooth swing. Why? Because market makers will hedge at every single level. That's why whenever I look at the, like for example, silver chart is messy. Let's have a look at it. So silver chart, I couldn't even start, like as soon as I looked at it, I was immediately like a little bit sick. So first of all, we do have this 80 dominant call wall. That's been the case for quite a few days now. But right underneath it, it's 79.50, which is not a lot of space on silver. Immediately you have another area. And then when I started looking at all the levels that we have, the lower down you go, the more levels that you find. So we already have some levels at 81, so immediately just there. 82, then 82.50, then 83.40, which is an odd one, probably a result of I don't know what, but you know, they're just maybe range bound areas, and it's like it's all weak, but enough of things there to kind of stop the clean rise through the level. So when I'm looking at the options chain, I want to see a nice space between, kind of like an FVG, right? It's the same thing. A nice space between one area with a lot of open interest and the next area. That provides you with some kind of a profit margin, at least it does for me. And it's been helpful in deciding whether I should be in a position or not. Now on copper, we have a situation where we have smaller GEX levels in the way, but the bigger levels are really from 580 upwards. And then we have a decent amount of space between 580 and 587. So if we manage to kind of go over this Tokyo low and the VWAP, maybe there's a bigger swing there. But because we are on the Tokyo low, my target here might be too much. So if we get to COMEX or half an hour before COMEX, we also have some, I think we have some releases today. Don't really want to trade through that. So I might just kind of take a scalpy scalp and then come back for London close and then just, you know, try and do my end of day trading that I do most days. Yeah, so we'll see. You know, we'll see. This is like an overlap trade, mean reversion. Again, 50% probability, but the MFE on the mean reversions is bigger. So, yeah. Right. We still have a few minutes to hang here together. So, yeah. The copper market is great for swings. I agree. Absolutely agree. At the end, so Jim says, at the end, if the price action is close to these lines, you need to take a look at the various things, CVD for ABS, and big bubbles and liquidity pools. Yeah, so liquidity pools, how the dome is reacting. A lot of the times on commodities, you will have like a big area of liquidity. They will smash through it and then reverse. Usually, but you have crude oil that smashes through it and then kind of carries on in some situations. So be careful. Again, every market has its own quirks and its own behavioral patterns. But yeah, you just need to observe things, start seeing patterns. With Bookmap, I would say that recording the screen alongside the price action screen has been very helpful for me. But at the same time, I already knew what they looked like in time and sales. So it's not like I was a complete noob with order flow. I was just like, time and sale a bit cancerous to me. So I'm like, I don't like it. And then Bookmap came on and I'm like, wow, this is like so good. It smushes price, volume, CVD, absorption, sweeps. Like, you can see it all. It's amazing. So to me it was amazing, but I know people who can't stand it. Absolutely can't stand Bookmap. So it's a love or hate tool. Try it. If you like it, use it. If you don't like it, don't use it. Very simple. Alright, so yeah, we're gonna sit on this copper trade as much as possible. We have failed the auctions now, officially, so let's focus on that. We are coming into volatility period now, so let's see if we survive. But I've only been tagged in one, so that's fine. I don't mess with my stops. I tend to keep my stops where they should be, and in this case, well below the gamma flip. So even if they decide to drip through it and then bounce away from it again, my stop loss is still the same. So it would be a noob move to move the stop. Like, let's say this is my position, to move the stop here. That's like the stupidest thing you can do. Why? Because that's where most market makers will be looking to take your stops, to whip it through another sweep before COMEX opens, and then to go back up. And then you go, market makers are taking my stops. No, your stops are at a really bad location. So get better at placing stops. That would be my thing. And I've learned a long time ago, whenever you have a reference low, especially if there's like equal, what did I just do there? I deleted something. I don't know what. Oh yeah, I deleted the white line. The white line. There it is. Gamma flip. Yeah, so I've learned a long time ago not to place my stops at like equal sided lows, even though the my entry is where it is. But you need to allow some wiggle room. Otherwise, they will take this at some point today, and you shouldn't place your stops there. It's too close. It's too close. That's way too close. We don't want that. Yeah, buy at the stops. Generally, yes. Not always possible, especially not in copper. But if I was, like, let's say trading crude oil or something, I love going into neutral day fades on the short side, where they smash through the low of the initial balance, rotate all the way back up, smash to the high. Oh my god, I love doing those fades. They're just so nice and crude. Neutral day responsive fades is what I call them. Right, so far, metals, so silver and gold, they're looking pretty decent for a continuation. I would say the gold is pretty weak though. It went into a normal variation day type, whereas silver has gone into a normal day type, so extended the initial balance by the size of the initial balance. And copper would be, in this situation, the strongest because it's the only one that's actually failed the auction already. So we'll see whether there's something to it. What indicators do I use? They're not really indicators, they're more tools. So I use TPO profile somewhere else, but you can use the fixed volume profile. It's pretty similar. I use VWAP and I use volume on so the volumes also have the simple moving average, which should be on here. I don't know why it isn't. And that's it. Sometimes I look at the larger time frame visible range volume profile, which I like to smush on a 4 week worth, so 4 weeks time frame, so not intraday. For intraday I use TPO profile, previous day value, and just basically tracking how the auction is doing. The only, I suppose, real indicator, but even that has the volume component, would be VWAP. It's a moving average, but better because it's got volume in it. And the rest of it is options levels, initial bounce high low. Not really indicators, just me placing anchor points of interest. I don't really resonate with lagging indicators. This thing, blue here, this is the correlation quotient with, I think it's with gold, just to see, you know, whether we are lining up with gold or not on the day. And then ATR, average true range. But yeah, it's more tools that I use. I wouldn't call them indicators per se. It's not like buy or sell indicator. It's just a lens into the market development and the auction process. So yeah. Right, let's have a look at the time. We've got 4 minutes, and then we're gonna make room for the opening call and for the daytime show. You won't be seeing me anymore on the daytime show, but you will see me tomorrow when I'm on group coaching. And then obviously, of course, metal markets Monday through Thursday. And, you know, check out our overnight programming as well. So we have, I'm one of them. Then we also have the slow markets with Coach Dakota. Coach Jay also makes a frequent appearance there. We have Coach Jay and Coach Paul doing at the buzzer. And we have Aaron for the London Open as well. So we have plenty of things to keep you entertained, not lonely, talking through things and through analysis, but at the same time, please don't copy us. You have to make up your own mind. This is a good educational resource, but we are here to teach you how to fish, not to give you fish, okay? It's not a restaurant. It's more a cooking class, okay? I'm going to leave you with that beautiful thought. Well, Topstep TV being the cooking class. And yeah, let's see what the day brings. We have some interesting things still happening with the Middle East. Interesting being the optimistic way to look at it, but it is a mess. So headline risk is still a big problem. Head on a swivel. It's still very, very sensitive to any news coming out. Size down, slow down. When you see a newsy candle, don't just plop in a trade. You know, try to find out what's happening before you do it, and keep your composure. In the meantime, have a lovely day. I will see you again tomorrow for another Metal Markets episode. Enjoy the opening call and hanging with the rest of the boys and girls. I will see you probably in chat because I do lurk. And that's all from me. This was the Metal Markets. I'm a Markets Talker D. I will see you again tomorrow. Take care.